How can you avoid paying taxes when selling real estate?
So it depends on what kind of real estate you're talking about, right? If it's a primary residence, something you lived in 2 out of the last 5 years, and it's a married couple living in the property on title, they can take $500,000 out, capital gain amount out tax free. And so that's what we did. What we measure the value of our homes, and every time that we had one that went up to 500,000, we sold it. We took the money, we moved to the next one. I didn't pay any capital gain tax, right? And I made $500,000 when I couldn't have saved $500,000. I just lived in it. Right? So that's one. What happens if you have more than $500,000 of capital gain tax? Let's say you had $1 million of gain, right? Somebody's not going to want to sell that, right? Because they're going to pay 30% on 500,000. That's a big number, right? $150,000. So there's two routes on that. One is if there's two dwellings on the home, right? You could separate the dwellings and have one as an investment and one as a primary residence. You could do a partial 1031 exchange on the part that you rented as long as you paid income tax on it, and the IRS knows it's an investment property. In this case, Matt, you can use two tax codes: Internal Revenue Code 121 for the primary residence, and you could use the 1031 exchange for the investment portion. Again, we build these plans for people. Some of these plans are 4 or 6 years in advance. Because if somebody says, I want to avoid it, I'm going to do that for them. I'm not going to get paid for a while. We're not selling it for a while. What do you think the client thinks of us? We're the consultants. They're not going to do anything with us. We're going to tell everybody about it. The other one would be if you have $1 million of gain and it's a primary residence. We've done this before where we say to them, if you move out of your home for 2 years, rent it for 2 years, then we sell it, and we do the 1031 exchange on the tax liability portion of it. Bought another property that you didn't live in for 2 years. Now you're renting for 4 years. You could eventually, if you wanted to, move into it in year 3. Right? That's a 5-year plan. But we eliminated 100% of their capital gain tax. So two strategies that really aren't commonly known to use. We've been doing this for people for a while.